We'd have to see significant adoption by central banks or governments in order to get the volatility to fall. Each cycle for Bitcoin has produced smaller and smaller returns. The previous smallest ever cycle was 2,000% from the trough to the peak. So if we assume a 1,000% price return, that would be roughly 180K for this cycle. So that's our base case. There's a number of short-term indicators that we're watching that might, either call the cycle ahead of that level or perhaps elongate it. But my best guess is 1,000% from trough to peak is a reasonable case for this cycle, likely to peak out in Q4 of this year.
Sigel begins by addressing Bitcoin's volatility, noting that while it has shown a pattern of lower highs and lower lows in terms of price swings, it still remains significantly more volatile, about 3 to 4 times compared to traditional assets like the S&P 500 and gold. For Bitcoin's volatility to decrease substantially, Sigel argues that central banks and governments would need to adopt it on a large scale, providing the asset with a more stable foundation. Despite its reputation as an uncorrelated asset, Bitcoin's correlation with the NASDAQ has been relatively high, currently near 0.3 on a daily basis. This suggests that Bitcoin, at least for now, behaves similarly to risk assets rather than a true hedge against market downturns.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
From a volatility perspective, we have seen a pattern of Bitcoin making lower highs and lower lows in terms of its volatility, but it's still, 3 to 4 times more volatile than the S&P and gold. So I think we'd have to see significant adoption by central banks or governments in order to get the volatility to fall dramatically. We still refer to Bitcoin as a chameleon. Its correlations change over time. Right now, the correlation with the NASDAQ is a bit higher than many would hope for out of a quote-unquote uncorrelated asset. So yeah, over time, the long run, I think it will fall. But for 2025, the correlation with risk assets and the NASDAQ is still pretty high. In previous cycles, in the post-halving year, which again tends to be among the most positive for Bitcoin, there's still the likelihood for a number of drawdowns. So as an example, in 2021, there was a 40% drawdown in the middle of the year before Bitcoin made subsequent all-time highs. There were nearly a half dozen 10% corrections. So that is, I think, just one of the characteristics of this asset, given the high volatility, and I think that'll continue. Now, I noted that rather high correlation to NASDAQ. It's nearly 0.3 on the daily, the correlation with the NASDAQ. So if there was a significant risk-off event, either because of escalating trade war or a Fed pivot and a kind of reignition of inflation concerns, I think most market participants would still take that as a negative for Bitcoin, at least its first instinct. Now that could change if geopolitical actors or someone else decided to buy Bitcoin and express their uncertainty through a purchase, but that would be a break from what we've seen over the last couple of years, which is Bitcoin is tending to act with risk assets. It tends to perform when the dollar is weak. So those would be the most, I guess, powerful backdrops, is money supply continuing to grow, contained inflation, the Fed cutting. I think these would be kind of the most positive backdrops for Bitcoin, and the reverse I'd have to consider a negative. I will throw one more thing out there. I tweeted this out, a poll on whether asking market participants if Elon Musk's Doge, Department of Government Efficiency, is having a negative impact on the price of Bitcoin. The respondents said 80% no, but I think it might be. Bitcoin, a lot of people buy Bitcoin when they're frustrated with how government is functioning. It's kind of a disillusionment asset. And, to the extent we get major sustainable cuts in the U.S. budget deficit, I think that'd probably be a negative for Bitcoin, all things equal. Too early to say whether that's been the case, but I think Doge is surprising some people on the upside in terms of the cuts that they look likely to make. We take a three-phase approach to Bitcoin price target. Over the medium term, we benchmark this asset to gold, and specifically the 50% of the gold market that's used for speculative purposes rather than jewelry and industrial purposes. So if you assume that Bitcoin can surpass that kind of 50% of gold market cap level, that would be a $450,000 Bitcoin price target. So that's our medium-term assumption for what Bitcoin can reach over the next several years. In the near term, we do tend to assume that the 4-year cycle will hold until the market tells us otherwise. And the most explosive part of the Bitcoin cycle tends to happen in the 1 year after the halving. So we had the last halving in April of last year. There was a nice election-related run-up. If past is prologue, then 2025 should also be a strong year. The question is how strong. Each cycle for Bitcoin has produced smaller and smaller returns. The previous smallest ever cycle was 2,000% from the trough to the peak. So if we assume a 1,000% price return, that would be roughly 180K for this cycle. So that's our base case. There's a number of short-term indicators that we're watching that might, either call the cycle ahead of that level or perhaps elongate it. But my best guess is 1,000% from trough to peak is a reasonable case for this cycle, likely to peak out in Q4 of this year.
Sigel's medium-term Bitcoin price projection is based on a comparison with gold, specifically the 50% of gold's market capitalization that is used for investment purposes rather than industrial or jewelry demand. If Bitcoin were to surpass that level, Sigel projects a long-term price target of $450,000. While this level might seem ambitious, he believes that as Bitcoin continues to mature and adoption increases, such a valuation is within reach over several years. In the near term, Sigel's base case remains aligned with historical trends. The most explosive gains tend to occur in the year following a halving event, which means 2025 should be a strong year for Bitcoin. However, he also warns that short-term market indicators could either accelerate or prolong this cycle.
Well, this will be the fourth cycle, and the previous three reliably followed the 4-year cycle, whereby the halving catalyzes a shakeout among Bitcoin miners. Some are forced to disconnect or sell their coins. The hash rate initially falls in the couple weeks following the halving. That clears the market and sets us up for a year of a bull market. So, I can be convinced that the 4-year cycle is no longer relevant, but I need to see the evidence of that. So the base case is that it continues. Historically, Trump presidency was associated with a weaker dollar, and a weaker dollar tends to boost the returns of non-US markets, commodity producers. Of course, Bitcoin is a commodity, so we think Bitcoin could act very well under these circumstances. But I'd say we're, constructive about equities generally, but see a bit more of a mixed performance with U.S. tech stocks outperformance, maybe not as pronounced this year as in the past couple of years. Our prediction is that either the U.S. federal government or at least one U.S. state will establish a Bitcoin strategic reserve. Right now, the odds at the federal level in the betting markets are about 50%. So it's a toss-up. I agree with your comments at the outset that there are a lot of optimists on this. My generalization is that the optimistic takes are happening outside of the US, where there's a bit less sophistication around how the bills become laws, right? Like less than 1% of bills actually become a law. So, the prospects for Senator Loomis's legislative approach to a Bitcoin strategic reserve, I think, are well below 50%. But when you add in the possibility for the Treasury Department to do this unilaterally at the direction of the president, along with all the states, there's now more than 20 U.S. states that have introduced some version of a Bitcoin strategic reserve. Some of these efforts or bills are less risky than what Senator Loomis has proposed, which involves, putting some taxpayer funds at risk. Some of the state bills would allow these states to collect Bitcoin as taxes, fees, and fines, and then hold that Bitcoin for 5 or more years, which would establish a reserve more organically. I think those bills have a higher likelihood than the federal legislation of passing. And I think that if a major state like Texas or right now Utah, which is most advanced in pushing this legislation across, if a state is able to get one of these signed into legislation, I think that will be enough to catalyze the rest of the world to accelerate their plans. So there have been a handful of countries around the world whose legislators have introduced possible new laws. None of them are particularly far advanced. I do think one of these states moving would accelerate that process. Our view is that a strategic reserve for Bitcoin would send a symbolic message of leadership and innovation and provide a financial hedge against a future we don't 100% control. And you just need to look at central bank gold buying in the 3 years since the Russia-Ukraine war started. It's up only. Today, the Chinese insurance regulator, for the first time, is allowing the 10 largest insurance companies in China to buy gold up to a 1% allocation. So there's clearly so much demand around the world for these neutral assets. And we think that if the U.S. were to adopt a strategic Bitcoin reserve, that would help ensure American dominance in energy infrastructure, in AI, and also in Bitcoin simultaneously.
Sigel suggests that a Trump presidency could be bullish for Bitcoin. Historically, Trump's tenure was associated with a weaker dollar, which benefits non-U.S. markets and commodity producers. Since Bitcoin is often treated as a digital commodity, it could benefit from these conditions. However, Sigel also expresses a mixed outlook on U.S. equities, particularly tech stocks, suggesting that their outperformance may not be as pronounced in 2025 as in previous years. This aligns with his earlier point that Bitcoin's correlation with the NASDAQ remains high, making its price action somewhat dependent on broader market trends. Please like and subscribe.